Good morning, everyone. Today is Monday, August the 27th, and this is the futures in five futures, 5 minutes. We are here at the blog area, but what we are going to start looking at for everyone else is these charts here in the middle of a breakout. We've got a big resistance area. We are up over it right now. Primary support on the week, 28.53, but it is fairly bullish. The problem is we could see two things. We could see a big squeeze because people don't expect it to go up over the top, or we could see a shallow fade with lots of money running into the space that also moves it up but then pulls it back. Bigger time frames show technical divergence, so that second choice is going to be something that you want to watch. The overall environment is slightly bullish, and so when we look at this space, we have to think about pullbacks being buy zones, but if our support gets broken, we're going to be in a little bit of trouble. Pre-market support this morning sits at the low of 28.76. That's going to be the edge we have to watch today from a support zone. Below that, we've probably got another 12 points underneath us before the chart holds traction again. Taking a look at the NQ, we've got big resistance up near 75.37. That is right up over the high. And that is going to be a big deal for this chart because it's not so bullish as some of the others. It's actually in a neutral to bullish formation. And so we should see a fade easily back into 74.98 before this chart holds up again. We could see 75.05, but my supposition is, listen, you want to be very careful about buying the highs here, but you also want to be careful about shorting the highs here because there is so much technical drift, a ton of cross currents. Weekly support sits well below this region. You can see all of the noise between 74, literally 74.05, all the way up to 74.85, giving us a ton of noise. So you want to be careful. Pullbacks give us buy zones, and I would say watch tight time frames if you're looking at cycles that can hold the support zone. The second we start losing 75.20, you're going to have to be a little bit careful there. Right now, we're well above it. Taking a look at the YM, big resistance here. This is really the weakest of the bunch. What it sits in is a topping formation, and it's well off of its highs, right? The highs are well above the highs that we can see on the chart, well above 26,300, and we are sitting really quite a bit below that, almost 800 points below the high, and that's not like any of these other charts. And of course, this is the one most sensitive in a grand scheme to what's going on in the broad market, speaking generally. Pullback action, 25,805, 25,770, with a primary support very deep, 25,610. There is a pocket of thin volume that I do not have plotted here. Don't want the charts to be too messy, and there is quite a bit of technical divergence. So you want to be really careful buying the breakouts here. This is the one that I would say exercise the most caution buying breakouts and allow it to come back and retest that breakout before you take it. Taking a look at oil, everyone's arguing about where oil is likely to go. It's been in a very big and wide, meaning long time. It's been a long time, and the range is wide, sitting between 65 and 70. 68.80 has been a clear resistance zone for a very long time. On Friday, we broke up above it, but immediately rejected, and now we're sitting trying to hold a congestion zone. If we sit above 68.34, we should be all right, but we really need to get up and over 68.80 and then pull back and make sure that it holds the level. Primary weekly support is not until around this line at 67.50, and that's going to be a pretty big deal. This one's also a neutral to bullish pattern and also showing quite a bit of technical divergence, so I'd be very careful buying the breakouts here as well. That's really very, very important. Lastly, we take a look at gold. This one has been in a relief bounce. Let's see, that's about 11 calendar days overall, and now we are sitting right at this first line in the sand. That's 12.14, and we spent a lot of time. Friday we could not get up and stay up over it. So this is that first pattern that we talk about as traders in the trading room, the failure to hold higher, and that is really what we're seeing right there. So what we'd want to see is a bounce here at our old resistance levels if we're going to continue up. That would give us resistance around 12.25 next, or a pullback into our tests of support, which are really anywhere from 12.03 all the way down to about 1194. All right, good luck today, folks. Cross currents, particularly in gold here and in oil, so we really want to be careful and think your trades through before you hit the switch there. Always important to do that. See you tomorrow.